registering your LLC business is the first step. But after you have registered your LLC business, how do you choose the right tax status so you don't end up breaking the law?
One in a million, one in a million, one in a million. You know they're coming up to me, cause I'm just the kind of flow with a stinging in the beat, but the rhythm's getting higher. Go, 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 go. One in a million, one in a million, one in a million, one in a million, one in a million.
Welcome back, folks, to another edition of the Awesome Studio Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about LLC business tax status. How do you choose the right status for your business LLC so that you don't end up breaking the law? Now, everybody knows that LLCs are one of the most flexible business structures, especially when it comes to tax purposes, right? But how do you decide which method of taxation is great for your business? So today I really want to dig a little deeper into the tax classification that is suitable for your LLC and its members, okay? First, let's talk about the basics. Right off the bat, I want to tell you that there are 3 types of tax classifications, okay? So you can choose your LLC to be categorized as a disregarded entity. I'll explain those terms later on, don't worry here, okay? So you can categorize your LLC as a disregarded entity, as a partnership, or as a corporation. So when we speak about corporation, we're speaking about either an S Corp or C Corp. Again, I'll explain that later on, okay? Now, I want to say that by default, the IRS classifies an LLC as either a disregarded entity or a partnership based on the number of owners or the number of members. So if you are a single member LLC, you will be treated as a disregarded entity. Okay, and if you are a multi-member LLC, you are considered a partnership. Okay, in both cases, and this is important to mention, the LLC is treated as a pass-through entity. In other words, you are not paying income at the LLC level. Okay, you have to file your 1065 or you have to file your 1120S or 1120, depending on the structure, or you have to file your Schedule C, but you're not paying income at the business level. You pay income, the income actually passes through to the owners. So you have to pay at the individual level, okay? And another option, so beside disregarded entity and partnership, another option available for LLCs is to be taxed as a corporation, okay? Both single member and multi-member LLCs can apply for C Corp status. What I'm trying to say here is that even if you're a single member LLC, you are one person, you can still tell the IRS to consider you a corporation for tax purposes. Okay, you have to elect. There's something called you have to elect to be taxed as a corporation. There are forms you need to file to make that election become true. Now let me talk to you about the statuses. Okay, there are 3 statuses, and I want to dig a little deeper so you have a clear understanding. So you have an LLC, right? This is good. Let's talk about disregarded entities. So by default, and I really want to, by default, single member LLCs are taxed as disregarded entities. Okay, so if you are a single member LLC, if you are one person company, one person LLC, if you don't do anything, if you just stay put, the IRS will consider you a disregarded entity. In other words, they will actually combine your personal taxes with your business taxes. So you are reporting your business income and loss items on your Schedule C of your Form 1040. Now, as a disregarded entity, there are some pros and cons, okay? So here are the pros. So this is really the simplest and most common tax status for single member LLCs, okay? As a disregarded entity, the LLC is not viewed as a taxable entity by the IRS. Instead, the income from the LLC passes through to the owner, who pays income tax on their personal tax return. Okay, boss? Did you get that? So that means that your income is only taxed once. It's important to remember this because I will talk later on about double taxation, but here we have single taxation. So those are the pros. Very simple to set up, and single taxation. The cons. The biggest disadvantage in our research of a disregarded entity is that the LLC owner is taxed on all LLC income, even if some earnings are kept in the business account at the end of the year for future expenses. In other words, you are paying income at the personal level, even though you're keeping some of the cash, some of the equity in a business account. Okay, so an LLC that's taxed as a disregarded entity is great for people who really want a simple setup. Because if you think about it, thanks to its simplicity and the fact that it doesn't require any extra paperwork, the default tax status of a disregarded entity is a great fit for most new business owners. Okay. However, if you plan to keep a lot of money in your business account year after year, then you may want to consider another tax status. So big decision time, boss. Big decision time. What is your status right now? Are you a single member LLC? Are you a multi-member LLC? Talk to me about your status. And what are you deciding right now? Are you looking for something simple in terms of a tax setup, or you want something more, I would say, involved? This is going to help you decide whether you want to disregard an entity or not. Let's talk about partnerships. Okay, so the thing is, if you have an LLC, you can elect to be taxed as a partnership. Okay, and by default, and here I want to stress that word, by default, multi-member LLCs are normally taxed as partnerships. So the partnership tax status is more or less identical to that of a disregarded entity, except that it is for businesses with multiple owners. Okay, so the IRS wants to make sure that if you have multiple owners, you are seen as one entity. So what are the pros and cons? Let's just dig a little deeper here. So the pros. So like disregarded entities, partnerships are not directly taxed by the IRS. So here again, we have the advantage of single taxation. So income from the partnership passes through to the different owners, who are then taxed according to their share of ownership. So business owners also avoid the double taxation model of corporations. Okay, so those are the pros. What about the cons? The partnership tax status can pose problems for businesses with passive LLC members. So the reason is that all members must pay tax on their share of the LLC's profits, regardless of whether or not they received a distribution. So it's not a matter of getting a cash inflow from the business, a dividend, if you will. No, it's the income. So either whether the income is distributed or not, you still have to pay taxes. Okay, and so this is one of the main reasons why investors typically prefer investing in corporations versus LLCs. Okay, so this status, this partnership status, is right for multi-member LLCs. Okay, so as a simple and effective tax structure, many multi-member LLCs will find the partnership tax status to be an ideal choice. However, if your company plans to seek funding from outside investors or other types of passive owners, you may want to consider being taxed as a corporation. This is important. So big decision time, boss. Big decision time. What kind of are you currently a multi-member LLC? Do you want to file as a partnership, or do you want to file as a corporation? What is your status in terms of funding? Are you looking for funding from investors, or are you, in terms of liquidity, are you properly funded? Those are things I want you to think about, but also you want to think about the number and diversity of funders or owners that you have. Okay, you got to go back and read the articles of the organization, or read the bylaws of the business to make sure that you have the proper model to be set up as a partnership or as a corporation. Speaking of corporation, I want to first talk about S corporations. See, the thing is that even if you are an LLC, you can still be taxed for, and this is for tax purposes, you can be taxed as a subchapter S corporation. Okay, so when we talk about S corporation, we are speaking about a subchapter S corporation. So the tax status is available to corporations and limited liability companies. So both corporations and LLCs can elect to be taxed as an S corp. Okay, it doesn't matter. So let me talk to you a little bit about the pros and cons of this type of legal setup. So S corps offer pass-through taxation, much like an LLC's default tax status. The business itself pays no federal income tax. However, the remaining profits, this is important, the remaining profits after expenses and distributions, that is owner, member salaries, and shareholders' dividends, that profits will pass through to the owner and is subject to income tax only and not employment tax. So only income tax. Okay. After all distributions are allocated and properly taxed, this remaining business profits are then known as retained earnings. In this way, S corporations avoid the double taxation of traditional C corps. Okay. And another advantage that we have seen with S corp is that active business owners are considered employees of the corporation, and the S corp pays payroll tax like a normal employer. So any money remaining in the business at the end of the year, guess what, can be distributed to active shareholders as dividends, thus reducing the business owner's total tax obligations. Okay, keep in mind though that the IRS strictly requires all S corporations to pay shareholders a reasonable salary. This means that the owner of a business with an S corp tax status cannot be paid a low salary in an attempt to avoid paying taxes. It has to be reasonable. Okay, and here are the cons. So the IRS has certain limitations on what businesses can elect as corporation status. In order to qualify, your LLC must have only allowable shareholders. They must be individuals, certain trusts and estates. They may not be partnerships, corporations, or non-resident alien shareholders. And the S corp must have no more than 100 shareholders. Must have only one class of stock. Okay, and another disadvantage is that shareholders are taxed on LLC earnings, regardless of whether or not they receive a distribution. Okay, so who is this tax status for? Based on our analysis, the S corp tax status is preferable for successful business owners who earn more than average in their field, as in some cases it can allow for certain tax benefits. Okay, and but that's what it is. But if you want to dig a little deeper, it's just a lot better to contact a tax professional. Okay, so big decision time, boss. What do you think? Does your LLC fit the S corporation, I would say, context or status? If yes, go ahead and just elect that status. The fourth category, the fourth status I want to talk to you today about is C corporation. So if you have an LLC, you can actually elect to be taxed as a corporation, as a C corporation. Okay, and unlike most LLCs, C corporations pay taxes on their annual earnings, and the corporation then distributes profits to shareholders, also known as owners, and they pay tax on the dividends. So that's what we talk about when we say double taxation. So if you really think about it, as a disregarded entity, as a partnership, as an S corporation, you only have single taxation. But when you switch to C corporation, you have double taxation. Okay. Now let me give you the pros and cons of this tax status. Unlike S corporation, C corporations are able to have an unlimited number of shareholders, and there are no limitations on who can hold shares. Another advantage of being taxed as a corporation is that active shareholders are considered employees of the business. This means that they can receive health care and other benefits packages from the company without paying extra tax. Okay, and it's also significantly easier to transfer ownership of shares in a C corporation versus an LLC. It really depends on the state where you registered though. Okay, it's important. Now, one of the biggest cons, one of the biggest drawbacks of a C corp, you probably heard this, you probably know this by now, is the double taxation. In other words, you are paying taxes at the company level, and you're paying taxes at the owner level, at the shareholder level. Okay. In addition, LLCs taxed as C corporations require more paperwork. I mean, if you are able to handle that paperwork, that's fine. But you should expect more paperwork. So overall, who is this status right for? It really depends. But overall, the C corp tax status is especially preferable for companies that wish to work with outside investors. It depends on your funding needs. Okay, and if you seek funds from outside investors, the C corp might be great for you. So big decision time, boss. Big decision time. Are you looking for external funding? Is your corporation big enough? Do you plan to scale very soon in terms of your operational activities? Then maybe a C corporation tax status for your LLC could be great. I'll be right back right after this. Don't go anywhere.
Finest, yo, 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 Mr. Killer, and call me señorita. Ay, papi,
folks, to another session of the Awesome Sweetie Kiwi Show. We are still having a conversation about LLC business tax status. And I want to talk to you now about strategy. See, the thing is that when you actually, when you choose a tax status for your LLC, there has to be a strategy that actually underlies the whole operation, the whole exercise, okay? How do LLC taxes work in general? Well, you already now know that you have 4 types of tax statuses, right? But remember that we're speaking about federal taxes, but also business taxes. It's important to really have that distinction, that dichotomy in mind, okay? So the federal government, as well as state and local governments, levy a lot of taxes. So at the federal level, we already know that for the 3 types, disregarded entities, partnerships, and S corporations, you only have single taxation. For the C corp, you have double taxation. You have to make sure that the state you live in also you comply with the taxes in that state, and also at the community level or at the county level. Okay, and LLCs pay income tax based on the tax status. But it's important to also know that when we speak about the amount that is transferred to an owner or a shareholder, everything has to be put into the articles of organization or articles of incorporation, and also the bylaws. Okay, so the corporate bylaws, this is where you have to put a lot of information regarding the split of profit and losses, the equity held in the business, and all that kind of stuff. It must be documented. It's important, okay? And so when we talk about multi-member LLCs that are taxed as partnerships or as corporations, remember that you need to think also about Schedule K1. We have covered Schedule K1 on other shows, but you have to issue to all shareholders or partners Schedule K1. This is what they will have to take, and they have to add that to their personal income tax returns to make sure that they pay their fair share of taxes. Okay, and don't forget LLC payroll taxes also, because LLCs that have employees have to collect and pay payroll taxes. It's important also, okay? And so we were talking about unemployment taxes, Social Security taxes, and Medicare taxes. This is important. And also don't forget LLC self-employment taxes. If you're self-employed, you have to actually pay your self-employment taxes. And we have covered this on other shows, and you can pay this on a quarterly basis. You can pay this on an annual basis. It really depends. You also have to think about LLC sales taxes. Again, I'm just acquainting you with all the categories of taxes that you need to think about if you're an LLC business. Okay, and so LLC sales taxes is important. So if your LLC sells, let's say, taxable goods or services, then you need to collect sales tax from your customers and remit the tax to the state or local tax agency. So in this context, you're not paying taxes. You're just serving as an intermediary. You're collecting cash and you're just sending it to the state tax authorities. So which goods and services are taxable depends on the state and locality where you do business. Okay. And also think about the LLC tax forms and LLC tax deadlines. So you need to also think about, so the exact tax forms you will need to complete your LLC taxes depend on 3 things. Whether your LLC is single member or multi-member, whether you choose a default, in other words, the pass-through tax status, or corporate tax status for your LLC, and whether your LLC has employees. Okay, so those are things you need to really pay attention to in terms of how you fit into the whole tax calendar. Okay, and so you have deadlines that fall on April 15th or September 15th or January 15th. Again, it depends on a constellation of reasons. If you have questions about those things, let us know in the comment section, and we'll be very happy to answer you. Okay, and so there are a few tax tips that we want to give you in terms of your LLCs. If you're a business owner, make sure that you take advantage of any tax deductions and tax credits that your LLC is eligible for. And you want to review business tax deadlines in advance, okay? And you want to note the relevant due dates. Those are really, really critical. And you can hire a CPA or EA to assist you with tax filing. Yeah, okay. And the thing also is you can talk to your CPA or tax professional about the potential benefits of electing corporation tax status for your LLC. So what I'm trying to say is that don't do things if you have no knack for things fiscal. Okay, you want to understand your state and locality's tax requirements also. So the bottom line is that there are several types of LLC taxes that you might be responsible for. Okay, and with so many obligations to remember, it's important to stay organized so you file the correct forms. And most importantly, you want to pay the LLC taxes at the right time. Okay, and choose the right status also. And if you need help, it's always great to contact a CPA, an EA, an enrolled agent, or any other type of tax professional to assist you. So let's have a conversation about the decision here. So I want you to look on the screen here. Let's decide on a tax status for your LLC. You can see on the screen here the legal structure, the pros and cons for each tax status: disregarded entity, partnership, S corporation, and C corporation. You can see for each structure the pros and the cons. We're going to leave this on the screen for a while. So really, this is kind of cool because it gives you a clear idea. This recap helps you make the right decision for your LLC. All right. Thank you so much for your attention to this conversation. I was talking to you about LLC business tax status. And I gave you the basics. I gave you the different tax statuses. We have the disregarded entity, the partnership, the C Corp, and the S Corp. And I gave you I gave you some guidance on the strategy you need to have in mind when choosing your LLC tax strategy, or your LLC, I would say, tax processes. Thank you so much for your attention. I will speak to you another time, but until then, remember, stay marvelous.